MMFs versus rentals, which is the best to invest? I get to be asked this question almost every day by people, either on my comment section on videos or maybe inbox. Oh, and by the way, if you need to reach me out, that is my number. You can send me a text on WhatsApp. If you need a private conversation about investment or finances, that's my number. Let's go back to the business. Now, people ask me, Joseph, please, would you mind to clarify to us? Some people are saying that money market fund is not an investment. And what would you say? Would you recommend somebody to invest on money market funds, or would you recommend that individual to invest on rentals? That is what I'm going to share with you. Some of you say I talk too fast. Now, on this one, I'm going to go slowly, step by step. Find yourself a pen and paper. But if you trust your head, you can just find none, just relax, switch everything that is disturbing you, consume this video. Let's get on the business. And by the way, don't forget, come on. I mean, if you've been watching my videos and you've never even liked it, just hit that like button. It does not cost you anything. Just take less than 1 second. Leave a comment on the comment section and subscribe if you've never. Let's go here. Now, these are two investments. Are we together? Or should I say, these are decent ways of having your money, somewhere working for you. Should I say that? Good. Now, them being two investment, there is one thing I told you, and if I've never told you, or if you've never heard of me saying or telling you, investments are vehicles. Are we together? Why? Why are they vehicles? Because they take you to your destination of what you define as financial freedom. The way I define financial freedom is different from someone else how will define financial freedom. Now, what takes us? This is you standing here. Are we together? And this is an entire journey. This is your present day. Are we together? Let's say you are worth 500K here, or 2 million or 10 or whatever, and your dream is to achieve 500 million. Are we together? Now, this is future you. Are we together? Now, what takes you from your present day to your future you? It is a vehicle. And this vehicle is an investment, whichever the investment it is. So view these investments as vehicles. Are we together? These are vehicles. Okay. Now, what happens when you ask me, MMF and rentals, which is the best thing? That's where I put a very big question mark. What do you want? Or where are you heading? So that we can see the appropriate vehicle that will take you to your future destination or your future financial destiny. Are we together? Now, if we were to do anatomy, that means if you were to dissect and find out what is this kind of a vehicle called money market fund, and we also do another anatomy on rentals as an investment, we check out and see if they or what they are and where they are going, then we can be able to pick the one that you can board. Now, let's start to draw what we call, because the question was, which one is the best? Of course, you're asking me, draw a parallel line between those two investments. Compare and contrast these two investments. Number one, if we have a person A who does not, first of all, understand, rentals, it's a capital intensive, CI. It's a capital intensive investment. Let me define what that means. It means it requires huge amount of money to start this venture. You need to buy yourself a parcel of land. Probably it'll cost you 5 million. You need to buy, or maybe 1 million anyway. And of course, you need to build those rentals, probably another 5 million. Probably to get into the real estate in Kenya, you need like 4 million-ish, 5 million and above. If you have that money, if then you're asking that question, when you have that money, you draw a parallel line between the rentals and the money market fund. Now, at that particular case, when you already have the money, the question should be, what other investments do you have? You have none. Okay. You want to invest. Okay, fine. Now, the question should be, you compare what you're earning from here vis-a-vis what you're earning from here. There is one thing that you're supposed to understand. With the rentals, probably let's say with an investment of 5 million, probably you could be earning around 40,000 in a month. I stand corrected. Probably that is the amount you get. 45,000. And if it's good, you can even, let's say you're operating at minimum. Let's say you're having 50K each and every month, assuming that you've already paid the income tax, not income tax, the rental, something, whatever, taxes. Let me just say that. You're earning 50K per month. Right now with 50 million, or rather 5 million within a money market fund, probably you'll be getting around 45K at most per month, okay? Now, what happens here? When it comes to rentals, you are winning in two ways. One, you are getting your monthly return, and two, you're getting what we call appreciation of the investment, or should I call it an asset? It appreciates. In Kenya, give it approximately of 3 to I wanted to say 7%, but we rarely hit that figure. Let's talk of 6%. This is at rate at which the rentals usually increase, 3 to 6%. So you're getting the monthly income, and then if you did build this rental, say with worth 5 million, then you find probably after some times, maybe it's around 5.5, 6 million, That's what I'm talking about, the rental appreciation. So you are winning in two ways here. When it comes to a money market fund here, you're winning on one way. That is, you're getting the monthly return. Let's say the interest, right now as we speak, the interest is a bit low. So the interest can actually appreciate. For example, right now, let's say an average return on a money market fund is 11%. It can even go to all the way to 16% like we used to have a little back there. Now, let's say it goes to an average of, say, a decent average of money market fund is usually 14%. So let's say if it shift from here to 14%, probably we'll be talking about even 60K per month. Now, what happens here? Sure, you may see as if you're earning more on a money market fund and you're earning less here. But of course, this one has its own disadvantages and advantages, and this one has their own advantages and disadvantages. Let's start with the disadvantages here. Your capital is tied down. If you take your 5 million, buy land and build the houses, your 5 million, quote unquote, is gone. Meaning if you need that money tomorrow morning, you can't get it unless you sell the entire structure, which takes a little bit of time for you to liquidate. So the capital here, it is tied. Are we together? Now, here, your capital is not tied. You can wake up in the morning and be like, you know what? I need my entire 5 mic, with me. Then you can take the entire 5 mic and put it in your pocket, and then you can go out and do your things. So if you are an individual who you're looking where you don't want to tie down your capital, you still want to have that financial muscle, or rather that purchasing power tomorrow, the other day, and whatever. You still want to, let's say maybe probably you are a young guy, you are a very young guy. And you want to have that purchasing power because you're trying to have that money set aside. When an opportunity arises, you can grab it. Then I would recommend having your money in something that we call cash or cash equivalents, such as a money market funds. You can have it in fixed investment fund. You can have it in something like treasury bonds, treasury bills. We call them the cash or cash equivalents. That's where you can have your cash if you don't want to really tie down your capital. Because if it's a case of a bond, you can sell it on a secondary market. It will take a much shorter period compared to you liquidating an asset such as a land and of course the rentals and what have you. So I know the ultimate question that you asked me, Joseph, which one is the best? We don't have an investment that is best compared to the others, but we can have an investment which is better compared. If you are comparing the two, the comparative and superlative, we can have a better investment. For example, say I was approached by a senior individual who probably got his retirement and what have you, and he has told me, Joseph, I don't want to have this capital accessibility. I'm not good with financial management. I can eat this money. I can withdraw it. So draw me a line between the rentals and the MMF. Definitely we will tend to gravitate towards the rentals. So in that case, then rentals is better than a money market fund. Again, you can be approached by an individual who tells you, Joseph, I have 5 million with me. Sure, the rentals I would love to build are worth 10 million. So I don't have that money for now. And again, I don't want to build a structure that probably I'm going to contemplate about, dismantling, and you get what I'm saying. But again, at the same time, I still don't want to have this money lying idle, doing nothing for me. Again, this money, I would love also to leverage on it for me to actually use it as my financial muscles or purchasing power to acquire some assets and buying it. You get what I'm saying? Then, at that particular regard, money market fund can actually be better compared to rentals. Number two, you can have an individual who does not have the money entirely to go to the rentals way. See, we can't stand here and say, hey, rentals are the best. And of course, here we are speaking with an individual who has only, say, 200K Kenyan shilling. That's like $2,000 in his or her pocket. Honestly, this can't build you nothing when it comes to rentals or real estate. It can't, unless you get into the REITs, real estate investment trust. Assuming we don't have as an option in this conversation, then this individual, you need to use, you see, I always tell people, money market fund is like an accumulation basket. It's an accumulation, but it's an entry level of an investment. It's an accumulation basket where you put your money, you accumulate. Once it reaches a certain level, then you can, because let's say, for example, someone tells you, Joseph, I only have 20,000 Kenyan shilling. That's the only money I have. What areas can I invest? You get what I'm saying? And let's say this guy tells you, I really love treasury bonds. He or she can't qualify because you need a minimum of 50,000. But you can start with this one. You accumulate. Once that money reaches a substantive levels whereby now you can be able to shift it to other, you can explore other better investments, then you can go ahead and do that. You find somebody tells you, hey, I have 4.5 million, but my budget to go to the real estate is around 7 million. So I'm missing like 2.5, Mike. So what do I do? And I don't want to get into the starting of the real estate or the rentals. Then they quote unquote, you get stuck somewhere with a structure that is not finished, and then it's not bringing you anything. Then you get stuck for the next 2 years or something like that. What can I? By the way, let's say this is a very good point. It helps me to differentiate these two. Let's say you have a budget of let's say you have 7.5 million right now, and your budget for the rentals is 10 million. So you are missing 2.5 million. Are we together up to there? Now, what happens? We have two ways of approaching real estate here. There's someone who will do the groundbreaking with 7.5 million. Probably they build that structure within a period of, say, 7 months. Are we together? 7 months. They come up with that structure, but that structure is not finished. We still have like 2.5 million to finish the structure. Probably we didn't have something to do with water, piping, sewage. Okay, we need like 2.5 million painting for us to have these investments of real estate to actually earning some income. And then you find somebody build the structure of 7.5 million, then they spend another whole 3 years. The structure is just there, it's just fenced, doing nothing. It's not finished, it's not bringing anything for the next 3 years. Just like that. They are waiting for the 2.5 million to finish up the structure. And I've met a lot of clients who told me this is what they did. For me, I find it wise to just take this 7.5 million, put it in a money market fund. Sure, you may not be earning a lot. Put this money in a money market fund. As it multiplies, 7.5 Mike will be giving you around 75,000 in a month. It's like you've already built yourself. And by the way, probably the renters will still give you the same amount of money. So instead of just getting the groundbreaking, you can just take this money, put it in an MMF, generates you income. As you figure out on how to get the 2.5 million, let's say it takes the same period of 3 years to get the 2.5 million to finish. The 75,000 multiplied by 12 multiplied by 3, this has actually helped you to raise some fraction of this 2.5 million. Now, when you do the groundbreaking, now when you get all your cash from the money market fund, if ultimately you are interested on the rentals, when you get that money, you do the groundbreaking, you go from the start to the finish completely, you are done, you have yourself an asset that is actually bringing you income. Are we together? So when someone asks me between money market fund and rentals, which one is the best? None is the best, but you can have a better one. Depends with your personalized needs and the journey. Where are you going? So that we can see which one can be able to fit you. But the ultimate answer to my question or to your question is this: both are good. Always have both. The question, this is like asking me between boys and girls, which kids are the best? None. All are good. Because what money market funds does, rentals won't do. What rentals does, MMF won't do. But when you have a combination of both, that is now what we call a portfolio of investment, a diversified. This is why I always tell people, you can have rentals, or by the way, you should have rentals, real estate. It's an amazing, I love that investment. You can have money market funds. You have yourself some stocks or shares. You have yourself international stocks. You have yourself a little bit into the Bitcoin, or should I say cryptocurrency. You have a taste into the real estate investment trust, that's the rates. You have some touch into what we call the index fund. You have some, you have a concoction of different things. And I love to use this simple example. Use a case scenario of pilau, or say jollof rice, or that popular dish in your country. It requires different parts or different ingredients to come up with that meal. And that is what we call diversification, or your portfolio of investment where you have different things. Why? Something, you see, the performance of a money market fund is determined by the performance of the capital market. Let's say something comes and affects all the money market fund and all your investments in a money market fund. Of course, that's not smart. Let's say something comes in, and for example, in China, we had a collapse of a company called, I think it was Evergrande, where they left a whole ghost town. They were building real estate. Things comes and crashes all the real estate. Yes, it can come. Or maybe today, one day, government can wake up and decide to have a very strict regulations. Probably they can increase the taxes on rental houses. You see, that is one investment that is affected. But when you have this, you have that, you have the other one, you have the other one, you have the other one, you can be able to, have differentiation. For example, let's say you are too good with a business that needed social interaction, like a barber shop, a spa, and whatever, and COVID-19 came. People had been discouraged to be close to each other. Your business was affected, isn't it? I know somebody who had taken a loan to start, I don't know whether you call it a bar or a club or whatever the thing, He took a loan to start that business. Then, boom, before even the onset of that business, boom, COVID-19 came. The bars were closed, the clubs were closed, So what do you do? You have a loan that you're supposed to service. All your properties, all your wealth is in one area. So that's why we cannot say this one is the best investment. That's why we say, what do you want? Where are you going? Then when we can draw a parallel line between the two, we can always have a better one. But the ultimate question is, have all of them. Oh my. I really hope I've tried my best to answer that question in a very decent, in a diplomatic way. But again, I'm never perfect. And also, you're not perfect as well. But leave a comment on the comment section. Tell me what you think. For an iron, just like it sharpens another iron, so do we learn from each other. See you the next time.